Hey traders, Raghee here. Great to see everybody. Happy Wednesday, everyone. All right, so welcome to Charts and Coffee. Rocking a little Kona Peaberry this morning. And my second cup, we've got our live trading coming up for our Sector Secrets Mastery coming up in 20 minutes. So I am well caffeinated, gang. So those of you will be joining me there in about 19 minutes now. Buckle your seatbelts. We got a lot that we're going to cover. All right. So speaking of a lot to cover, let's get to the questions. Yes. Good morning. Good morning. Happy Wednesday, everybody. And the mastery will be right after we wrap up Charts and Coffee. Denise, yeah, that mastery starts at 9:20. And we'll be going to about 11:30-ish today. So good 2 hours plus. We'll do some live market morning coverage, and then we're going to go into our book, our fairly formidable book, and figure out where we want to start building those next trades, where our watch list is at. You know, we've still got a lot of really, I think, macroeconomically sound, rooted positions. You know, long Germany, long Europe, UK, Euro. I mean, these have been trades we've had open for a while. So the question is, you know, what are we going to start giving them some company and continue to expand that book? And I'm super excited about it. All right, so let's go ahead and kick things off with some questions here. And bought some Phil Mickelson coffee yesterday, Cynthia. Yeah, he uses that European, and I know I don't say it correctly, pronounce Eurograph. I'm a big fan of that. I've been getting mine from Volcanica for, I guess, a couple years now. But that little additional, hey, let me warn you, Cynthia, I don't know if you bought the tub, right? His Coffee for Wellness tub. If you've never taken, this is just friendly advice. If you've never taken MCTs before, pace yourself. And I'll leave it at that. They're amazing, but definitely pace yourself. All right. So what kind of TLT plays, hey there, Ronaldo, can we make with the expected increase in ZB and ZN? Love the question. All right, so let's dive into ZB and ZN. So, of course, anytime I'm going to make a play on the 10 or 30 year. Now, remember, ZB is the longer end of the yield curve. TLT is sort of this mix of 10 and it's really considered a 20-year ETF. So it's kind of a mix of the two, sort of longer end of the yield curve treasuries. But you're right. I do want to keep an eye on what's happening on the futures contract primarily. And if you've been following, now look, this is kind of an older narrative. So let me bring everybody up to speed here. If you've been following this narrative with me in the futures room, you know, we've already had a really interesting 1, 2, 3 that had its break through the resistance of the swing high and the wave back in here. So that's done, that's happened. That initially flattened the real yield. Don't confuse real yield with yield curve. Real yield is really what we are watching, this 30-year and really the 10 to indicate was continuing, was going to stop going higher and actually flatten out and continue to flatten out. I don't need real yields to drop, although if and when that happens, which it could, now with the slight tick up in the inflation rate and the slight tick down in the nominal yield of a bond, that's going to result in a lower real yield. And you might ask, why on earth would I care? Why do we care as traders? If you've been looking at gold, if you've been looking at silver, you should care a lot because this is what opened the door to the follow through in gold. And this is something we were talking about in mid-April, right? So once this happened in mid to late April, actually mid-April, that opened the door to gold moving higher. So we've been bullish on gold for a little over a month. And if you want to know precisely when we sort of flipped the switch on that, it really was between the 15th and 16th of April, because that's when the swing high was taken out. That's when we completed the wave reversal on the heels of the flattening of the real yield. Okay, so fast forward, when does the bond market start to follow gold? And I think that it's still actually a valid 1, 2, 3 wave reversal. It just hasn't gone anywhere. And so I'd probably still continue to be bullish gold and copper, which is something I discussed in the free video last night. If you can check that out when you have time over at the Simpler Trading YouTube channel. And we are looking, as you can see, we're getting our rollover in gold. So remember, we're going to go out to the next contract, August, on pullbacks if you're playing the underlying gold futures. I like the pullbacks in gold. And I mentioned yesterday that I expected gold to hit about 1920 before it starts to fatigue. And I think we're going to see that here today. But where does that leave the bond and the TLT? I do like, generally speaking, a little bit more upside, but I'm actually a little bit more keen on long gold and long copper. And if you do want to look at some TLT here, I'm going to probably wait on another pattern I'm in the middle of watching. I'm probably going to wait on ZB trading a little bit further down to the lower end of the range. How would we define the range? Good old Darvis, right? I have Darvis running on, so I'll probably wait for Darvis to help me out with either maybe a halfway mark on the Darvis or the lower half of the range. And I'll look for bearish momentum to scoop up some TLT. I'm not there quite yet, but look, we've been bullish TLT, which really kicked the door open for gold since middle of April. So the real question is, and thank you for it, when do we get to play TLT, ZB, ZN? And I just don't like it as much as I like gold, but it's definitely something we can keep an eye on. All right, next up, and by the way, think about the knock-on effects. So we have the knock-on effect of ZB and ZN, are 30 and 10 respectively, help gold, and it probably will at some point help silver. But what it's really going to also help is we know that if and as the 10-year yield drops, we're going to see equities definitely benefit from that, as well as gold. Okay. All right. So thank you for the question. ITB, I have a position almost to my 25 stop. Yeah. So what happened to ITB? What happened we went bullish on home builders and construction in sector secrets. So we went in on more granular individual stock plays at the end of February, stopped trading tech at the end of February, got Donkey Kong like a lot of people did with that rollover in February, went long DHI, Lennar, I believe, KB Homes. I'm trying to remember what we did back then. But we went in on some of the relative outperformers in ITB XHB. But what happened since then? So fast forward to, 2 weeks ago now, almost 3, that CPI number. That CPI number was a needle mover, and it really shook up the long end of the yield curve. And I don't know that ITB and XHB have truly recovered from that. So and I'm still bullish those markets though. I'm not bearish in any way, those markets, but that CPI definitely rocked that narrative of the longer end of the yield curve. And then inflation fears, which is again tethered right to that CPI number, and how that is now affecting new home sales. And we can see XHB and ITB are suffering because of it, not able to continue. I do believe the continuation is the likely direction. You can see what happened back in here, and I'm expecting something similar to happen, but I really need a little bit more confirmation. And the lower end of a Darvis box like we have here is probably going to be a really great place to think about it, the lower end test of the Darvis. So what I'm saying is, if you're going to re-engage or if you're managing, watch that lower end of the Darvis box. You guys know that we're huge fans of Darvis around here, and we use it to automate support and resistance. It's part of my tops trading. It's part of my day trading. It's part of everything that I do. It's the foundation. And so, I'm never going to veer too far from it. So if I can use that level, I most definitely will. And I would also say, Debbie, I think that if you're still in it, yeah, I think the path of least resistance is to the upside. But I will also say, make sure you're not too focused here, because there are other places that do have, better structure, better bullish double green structure. Okay. All right. So thank you, Kevin. Good morning. My thoughts on beans and corn after yesterday's drop. So corn took it on the chin, far worse than beans. I think we're going to recover with a lower low, minor low, or an inside day. And the reason I say that, and the reason it dropped, for those of you that are unaware of why it dropped, most of that was from what I have to presume was not what it was. We know what it was. It was the crop progress report reaching the benchmark of the 75% planting. That means planting is going quite well. And, if planting is going swimmingly, then what do we know? We know that probably harvesting is going to go well. We know that the yield is going to be probably optimistically higher. And then that means more supply. Supply, demand, boom, more supply. And if we're met with it, lower demand narrative, we could head even lower. But reflation should still be very, very good, bullish for this market. Soybeans has held its own better. I would also keep an eye on bean oil. I was really disappointed that bean oil didn't pull back more, because I probably would have said, look, heck with corn for now. Corn we were joking in the room, corn had its Bitcoin moment, right? We were joking and calling corn Bitcoin, just the way that it was moving. Corn has had its big moment. I think beans are taking a little bit more of the attention, the forefront right now, but I like both these markets. Bean oil, which is really the relative outperformer, and corn. So the progress report came out. It was very good planting news. These are releases by the USDA. Think of them in many ways as earnings for grains. If you want to take a little bit of that stock analogy, stock psychology, and apply them to something that few people feel a little bit separate from, but these are grocery store commodities. These are really good, tangible things that from time to time you probably have on your dinner table. So I am bullish still. And this little small pause of a minor low or inside day could give us another chance to build a long position. And that's definitely something we'll be talking about in the sector secrets here in about 7 minutes, as well as things like ADM and deer and cat and moo and other ag related narratives, which I'm still DBA, which I'm still, again, very optimistically bullish on. And again, if I can test these Darvis lows, you can see we're testing them right now. I think they're going to yield probably some nice long positions for us, especially if we can capitalize on some bearish movement to get a better bid on, get a better fill at the bid on the options that we're going to want to buy. So thanks for the question. Do I buy insurance to cover a position? Well, when you say insurance, Jonathan, if I'm trading a really wild and or illiquid commodity, I might buy puts in lieu of a stop loss. So that's something I might do. So if my position heads lower, I've got the puts increasing in value. So there's my counterbalance, if you will. I don't do that often. I'll do that if I'm trading something like natural gas, or if I get into something illiquid like a wheat or a lumber. I'll want that seatbelt, if you will. It's an airbag. Other than that, no. I mean, insurance, my best insurance are the trends. They're the ones that are going to keep the probability for the trade high. And so, I think the best insurance, again, is the market structure, is the trend. All right, next up, China limits some corn imports and cancel some U.S. shipments. Yeah, that didn't help, Marco. I think, to your point, the supply narrative, very bullish. the demand narrative. I heard a little bit about that, but we've seen discussion like that before. So I'd have to really look at, how much less really. Is it a significant rate of change in what we're going to export? We've seen things like this before, and corn be pretty resilient in light of that. So, where to sell? Okay, we covered the insurance question. So that's what I'll typically do. I'll buy puts. If you want to sell credit, again, whatever you want to do to cushion the blow. So if you want to go with a put credit spread and you want to play directionally long, yeah, you could collect credit as a way to. But I'm not typically a big fan of a put credit spread as a sort of safety net. I don't necessarily. Again, if we're trading something fairly consistently vanilla, like a vanilla trend, there's no such thing as a vanilla trend in natural gas. It could be very volatile. Depends on the market. It depends on the typical historical volatility as far as whether I feel I need a different level of like you said, insurance or protection, whatever you want to call it. Let's see, VALE. Yes, we've been talking about VALE as one of the relative outperformers within SLX. We are interested in starting to build a long position on the pullback. Right now, with a few days of tech moving higher, it's definitely sort of taking the attention away from the reflation trade. And that means that those are pullbacks we can start looking at, whether that be, well, let's see what we got here. What's on the radar? I've got a couple stocks in healthcare on the radar. I've got a couple potential squeeze setups I'm watching in Alcoa, McDonald's, GE, energy. We got a number of names in energy that we're looking at, SLX, miners. So again, I'm not going to chase where the attention is now. I don't want to buy momentum higher. I want to look at where is that momentum stealing attention from markets that have mostly a double green or have been mostly double green. The slight transition to a yellow neutral trend, even for a couple of candles, you'll see we've done this before in SLX. And again, anytime we transition out of a trend, remember the trend that was, that's Charles Dow 101, and assume the continuation, not a reversal, not a severe correction. Assume the continuation, that is the more probabilistic side of a trend, a healthy trend at that. So I like VALE a lot. We've also talked about MT. I still like it. Yeah, but also remember, if you started a few days ago, look, I mean, anything before the 19th, and I don't know what price or what date you were looking at, but anything before the 19th, quite frankly, anything before 31 would have been a little bit premature. So if you're, again, not knowing what your trade was, Anthony, if you're down 30%, that was an aggro level entry. Maybe it's a 13 or 21 EMA, which is not invalid. It's just aggressive. We're in the conservative area now. We're inside the wave, and that's my preferred zone for these types of trend follows, whether that be VALE, whether that be MT, whether that be SLX. So I can see where you might be taking some heat from. I'm sorry, that was MT I was looking at. My apologies. If you were getting in before, say, 2060. Yeah, you're probably down a little bit, but 30 seems a little much. Again, not knowing where you got in. Just think about where you're buying and what kind of momentum you're buying with. And that's going to probably explain the degree to which you're taking heat or not. Now, if you bought the calls on an up day, I never do that. If you buy the calls very aggressively, it should be a small position with the expectation that we could move lower and I have the capital to engage the market from a moderate or conservative level. And that's the way we look at the trades and sector secrets. We scale in, acknowledging that certain trades should be smaller because they're placed at a more aggro aggressive level. All right, I'm looking at XLE last night. Hey there, Eric. And again, thanks for the question, Anthony. Looking at XLE, right? Yeah, we are too. Oops, I didn't mean to type that into the chat. Here we go, XLE. Yeah, same thing, ditto. I'm with you. I'm looking at XLE as well, not just XLE broadly, but some of the relative outperformers. So I'm kind of with you in that I would just assume take the tide. Do I like the individual stocks? Chevron concerns me. I keep typing this in the wrong place. Sorry, gang. Chevron concerns me a little bit, I will say. because it's far choppier than Exxon. And although Exxon has actually started to chop a little bit, but Chevron is a little weaker. It's the second weighted stock in this ETF. So I'd rather maybe take a more diluted view, go with the XLE, go with the tide and not the individual boats, but there's a lot to like in the XLE when you break it down to a multi-chart, which I don't have time to do right now. But yeah, I'm with you. I like it a lot. I love where your head's at. Where is the market not looking? Yet there's still a good trend, both technically and macroeconomically. Yahtzee, that's where we want to be. That's why we're long Europe. That's why we're long UK. That's why we're already long the Canadian dollar and Canada, long the euro. We're already long these now for weeks, and we want to continue to buy and roll with this narrative to the upside on the pullbacks. So thanks as always. All right, let me head on over to our sector secrets. We're going to kick off our live trading, monthly live trading there. Although we do meet for extra sessions more often, but this is the big session where we go over the book, rebuild watch lists, and so forth. So look forward to seeing some of you there. You can check that out. I don't believe that, well, it might be a little close, but you can check out what we're doing over there at simplertrading.com/sector. All right, be good to each other. I'll see you tomorrow for our next episode of Charts and Coffee. And until then.